All right, so let's take a look at some examples here, and just to make sure that we are clear on whether or not it's pins to the 50, 200, or whatever the case may be. So on this particular example here, all right, uh, would you guys consider this pins to the 50? This is not pins to the 50, and the reason why it's not pins to the 50 is because the 50 is right here, right? And so when we mean by pins to the 50, we want price to actually already be down here and actually coming back up to pin to the 50 and then move away from it. Okay, so this would actually be a good example of using the EMAs for take profit, right? So use it here and use it down here. So this is a 200 here, and this is a 800 here. Now, pretty interesting fact is that the trades that go to the 800 are typically level 1 trades when coming off of peak formation high or peak formation low. So basically the first big movement that comes out of peak formation high are the ones typically that make it to the 800, because we're basically doing essentially a transition, right, from going up to now basically, starting to do a downtrend. So those typically are the ones that that you find that go to the 800 and you can take profit. A good example of that would have been on Friday. Friday you had essentially pound USD was a good example. You had peak formation low on Thursday on a 15-minute chart, and then literally after that particular day, the Asian range for the next day was basically level 1, and then as soon as the London session opened, it went up to the top of the range, right back down to the middle, and then took off, right? And that basically went all the way up to the 800 and then went sideways and then ended the week. So if you want to look at another example, that would be a good one that just happened literally last Friday. Let's go to this one here. So this pins to the 50, would that be a good example of a pins to the 50?
Yeah.
Yes.
Yes, right? Cool. Yeah, so that's be a very good example. Where basically we're coming down, price comes up to the middle of the range. So this would be a type 3. You get a pin to the 50 and a type 3 at the same time. This would be your trade. This is actually what I'm talking about here. This was Thursday. You had a peak formation low here, sideways movement, right opening of the US session, literally pinned up, pinned back down, and then took off. And then this went all the way up to the 800 throughout the day. So on these kind of trades like this, where you notice where it's very obvious of peak formation low being created like this, and you see this kind of behavior, be ready for this, because this is going to happen. And if you miss it during London, essentially all you're waiting for during the New York session is basically a continuation trade, and just take it to the 800. One thing that we're going to get into in the following weeks after TDI is we still have like psychology, we still have risk management, we'll still talk about patience and stuff like that. So we still have all of that to go. But when we get into, risk management and how to take trades, how to scale trades and things of that nature, you guys need to start like thinking about having some kind of a signature trade that you can basically go to, and that would be like your go-to trade. Okay. The reason is because there's going to be times where you're going to have, maybe, I don't know, 2 or 3 losses in a row, and you got to have something that that you're going to be confident in, and basically to get you back on the right track. Okay. So start thinking about what kind of signature trade do you want to have? What is going to be your signature trade essentially when you have that kind of experience happen to you? And so very important that when we get to that week, I want you guys to already have something in mind already as to what that signature trade looks like, whether it be something like this, where you identify peak formation low, and you see this kind of behavior, and then basically you take the straightaway trade like this, or maybe instead of this coming straight out like this, maybe it has a false move to the bottom, and then it goes up. So whatever it is that you feel most confident in as far as your trade setup that you've been going through your back testing, whether it be a type 1, 2, 3, whatever that is, make sure that you have it in mind, because when we go into that, the risk management week and stuff like that, we're gonna show you a couple different things on how you can scale up, and lot size basically, and scale down when you need to. But very important that you guys have to have some kind of a signature trade in hand to kind of help you get back on track whenever you do have, 2 or 3 losses in a row. Because what we don't want to do is we don't want you guys to take 3 trades in a row, and let's say you have 3 losses. And then at that point, if you don't have any kind of a plan for it to counteract this, you're essentially going to start to do things that are not normal behavior for what you're trying to trade, right? So you may get into a situation where you have 3 losses, and then now you're not thinking irrationally, and so you're basically revenge trading, to try to get back some of those losses, and you end up losing more trades for no reason. Okay, so just something to think about over the next couple of weeks. All right, how about this one here? Pins to the 50. Would this be a good example of pins to the 50? It would be, right? So where you have basically a continuation trade here where they're using the 50, right, as support here. Okay, so that's a good example. Let's go to this one here. Good example here, yeah? Pins to the 50 as well. You have movement straight down, goes back up, gives you a star pattern here, and then just goes straight down. Pins to the 50. That's what you're looking for. How about this one here? Pins to the 200. You don't think so? Why would this not be a pins to the 200? Not a trick question, by the way.
Because the candle, the body is on the 200, I think. That's why.
Okay. Well, the body itself being on top of the 200 like this is not a bad thing. So this is not what doesn't qualify it for pins to the 200. Like there's literally pins to the 200, right? But when I mean pins to the 200, I mean something that's actually tradable, right?
Oh, okay.
So essentially, is this tradable?
Yes.
Like is this, where's the timing on this?
Oh, it's there's no timing here.
There's no timing, right? So it's not in a box, right? It's not in the box at all. So yes, this is it's pinning to the 200, but you can't trade it because it's not in the box, right? This is like 3 in the afternoon, because here's the 5 o'clock range here. Right. So this is like 3 p.m. here. So yes, it's pinning to the 200, but what I mean of pins to the 200, I'm talking about trying to find an actual like trade that you can take that's within the box. Okay. So is this a pins to the 200? Yes, but it's not tradable. So it's not the ones that I'm really looking for. I want you guys to focus more on, pins to the 50, pins to the 200 that are actually tradable, and something that's tradable, like, like something like this up here, something like this over here. So stuff like that. Let's see. So pins to the 200 EMA. How about this one here? Pretty interesting, huh?
No, I don't think so also.
You don't think so? Why don't you think so?
The EMA is away, I think. It's not here.
Well, here's a 200, right?
Yeah.
And so the pins, here are the pins to the 200.
Oh, okay.
Is it in the box? Yes, it's in the box. Is it, let's say, is it a pattern that you can trade, right? So if you erase all this stuff from it, If you're just looking at this, you might essentially think that you have what there?
You have a W.
Well, this would actually be an M.
M, actually. Yeah, M, sorry.
Right. This would be, so if you switch it to a line chart, these candles right here will actually give you an M, because you have you have the first leg here. You have the first leg here. And then since this bar is coming straight down, the next bar is going straight up, and the next bar going straight down. Literally, this will form an M. Okay.
Right.
So if you're thinking that that is an M at that particular time and moment, let's just block out this stuff here. If you're thinking that this is an M, you still have to wait for what?
The cross of 13 and 5.
Right. So you still got to wait either for the cross or for price to get below this 13. And looking at how price is, pretty high at that particular moment, right? So it's pretty high up here. You have that big separation, basically, of it. Now you do have this candle here that closes below the 13. Okay, so if you're thinking, okay, well, maybe if I take a trade from here, and your stop loss, let's say, is up here, you got to see, number one, how big is this stop loss? Okay.
Yeah.
That's one. And then two, you have to do what? What's the last thing? What's something that's missing here that would not allow you to get into this trade as an M? That
The
won't
50
allow
EMA.
you to do this.
Yeah. The EMA, 50 EMA is too close to the 200 also. And there's not a lot of pips here.
Right. So here's the one thing that I want you guys to start looking at is basically this.
It's level 1.
This is peak formation low.
Yeah.
Sideways movement, and then going up. So this is a trade that I was talking about Friday. But what I want you guys to get at is I want you guys to start looking at the full picture, right? Just having an M here, having a pattern, let's say, timing are only two components of the three that you need. What's the third one?
Cycle levels.
Cycle, right?
Yeah, cycle.
So think of it like this. We're going to make a new acronym, PTC. All these three things have to be correct, okay?
Yeah.
They have to be there for you to take the trade. You want to know how you can get a very high, high winning percentage? Take trades that only have PTC in them, that have the pattern, the timing, and the cycle, right? So all you got to do is look at this is Friday, so you should know exactly what kind of a cycle you're in, or what the situation is. This is Friday, so you got the whole week. So Fridays, if you're trading Fridays, which is not a problem, you can trade Fridays, you should be getting a very high win percentage on Friday, because you've got the entire week already of data to tell you what it's been doing, what kind of a cycle it's in. Are you trading off the low of the week here? So start taking into account the entire thing. PTC, okay? Because all this matters. All right, so pins to the 200. This is a good one, yes?
Yes.
Pins to the 200. You get a railroad track right here at the New York session. This whole bar here is, probably like 20 pips by itself, because the entire range is 38.
Wow.
So just this one bar here is probably 30 pips, or no, 20 pips, I'm sorry. Because this entire range here is almost 40. So it's half of the range right there in one candle. Where does it go to?
No.
It goes to where?
To the 800.
To the 800. So 1, 2, 3, 4 candles. And it's done trade 20 pips. Around 20 pips to the 800. All right, so this one here, good example of what? Taking profits, right? You have the EMAs here in your favor. You basically have peak formation high here, creating peak formation high. This is a Friday. So just by looking at what happened on Thursday, what kind of a cycle are we in? If you had to guess what kind of a cycle that is, what would you guess? If you look at Thursday, it's been basically going straight up, right?
Yeah, it's trending.
Trending, right? Trending cycle, right?
Trending, yes.
If you had to guess, because we don't have the data from Wednesday or the day before.
Gotcha.
Right. But just off of, what you have on Thursday here, the whole session, all one up.
Yeah.
Asian session went straight up 90 pips. See that? 90 pip session.
Yeah.
Basically moved the entire ADR during Asia. And then look, it still moved 41 pips during London and another 52 during New York session. So almost a movement of about 200 pips. More than that, actually, right? About 200 pips, yeah.
Yeah.
About 200 pips in one day.
That's
crazy. The Euro NZD. There you go, NZD pair.
Yes.
Okay. But here's an example. When you have peak formation high at the end of the week, trades, this probably already ended, actually, so I don't even know that this ended like this. But essentially if this continues, these would be your targets right here. So let's just say that this is the way that the chart ended on Friday. So Sunday, Monday, what would you expect to happen?
Go down.
Right. So
or it's gonna go up, like fake move up and then reverse down.
So here, let's just do this. Right. There's your session start over. So let's say this is Sunday, Monday. Right. So depending on what happens during Asia here. So let's just say it does this during Asia. What would you expect to happen?
Fake move and then go down.
Fake move and then go down, right?
Yeah.
So you have really one of two options. You can do a fake move up and then go down, or you can literally just do a move from the middle of the range and go straight down like a straightaway trade. So it all depends on what happens during this Asian range. If this Asian range doesn't go sideways straight across like that, and it starts to do something like this, well, then what's going to be the behavior essentially is we're waiting to see what happens when they get up here. Are they just going to tag it basically and make, like a triple top to go down? Do you see what I mean? So it's just different scenarios depending on what happens during the Asian range. Hugely important. All right, so pins to the 50. No, this is not pins to the 50. Take profit at 50 EMA. What would this be a good example of? Is this a good example of take profit at 50 EMA or a good example of a pins to the 50 EMA? So pins to the 50 EMA is better than take profit to the EMA, right? Now, why do we say that taking pins to the 50 is better than take profit at the 50? Because of what?
Because you don't have a pattern down.
Because you don't have a pattern
down in London
up.
Session. Yes.
Right. So basically all you have here during the beginning of the US session is essentially a continuation trade. You see what I mean? You're not at the bottom, you're not at the top of the range. You're in the middle, literally right in the middle when you start the US session. So you have that in your favor. Second thing you have in your favor, of course, you're pinning to the 50. That's another thing in your favor. What's another thing in your favor? You have a star pattern there as well. So you got three things essentially telling you what direction to go. And what's the fourth is you have what happened on Thursday is up here, right? This is what? Peak formation high. This is a midweek reversal right here. Why? Look what happens during the Asian range. What happens when it gets here? It just goes straight down. Do you see that?
Yeah.
It doesn't even think about it or nothing. It just goes straight down. Here, this a good take profit for the 800. It's basically a type 3 setup here at the top. Type 3 setup here.
Yeah.
You can use this as a take profit. And then here's another take profit as well. So you got two take profits, a 200 and an 800. All right. How about this one here? 200 EMA take profit. Makes sense?
This is the Asian box here?
Sure looks like it, doesn't it?
Yeah, I think so. I don't know. I think yes.
Well, here's New York. Yes.
Yeah.
Here's New York. This is London.
London.
This is the Asian box.
Right.
Right. This is the Asian box here. So this is Asia, right?
Mm-hmm.
So bad example, right?
Yeah. Right.
Because it's not a trade that we would take anyways.
No.
So what is a good example would have been, let's say, this here. That's a good example.
Right.
200 EMA, take profit.
And then 800.
And then exactly, and then at 800, take profit. This one here, good example of a take profit 200 EMA. This is Asia. This is London.
Mm-hmm.
New York
Yes.
session is here, right? Basically a continuation trade.
Yeah. Good example, yeah.
This one here, is this a good example of a trade?
Yes.
Take profit at the 200. So I take it this is what? Support at 200 EMA. So pins to the 200.
Doesn't pin here, right?
What's that?
It's not pinning to the 200, right?
It's right above it. So
Yeah.
a couple different things. So this being the Asian box, right?
Yes.
This being the Asian box, I mean, you can say it's basically support. You know, the 200 is acting as support, right?
Okay. Mm-hmm.
So this is true. So this is acting as support here. But a better example of something that's pinning, you know, would be something, let's say, like this here, where it stops as a take profit from, let's say, this here. Do you see that?
Yeah.
So you see a multi-session M here with the pins here. You think that's a coincidence of why? Look, they pinned all throughout here, and they go up. How many pips do you think that is up here?
20, maybe 25.
You know,
Maybe.
this is JPY as well. So this will be a better example down here as a take profit. Let's see. So pins to the 200 basically. Price goes and gets rejected. Here's the New York session here. Goes up, pins it, comes right back down on a railroad track. You actually get a second leg here. So be first, come back down, go back up, and then gets rejected there. So here's what pins to the 200 here, right? This would be your Asian range here. You get railroad track stop hunt going back up, coming back down. They pin it again, and they go back up. Pins to the 200. All right, so what would this be a good example of?
This is pinning at the 50 EMA here.
They're pointing, let's see, so they're pointing here to this event here, right? So basically saying this is pointing to the 50. So pins to the 50. Does that make sense?
Yeah.
New York session is here. So basically as you open the New York session, you come up, you pin to the 50, and then you drop.
This is a continuation trade, right, Mark?
Correct. Yes.
Oh,
yes.
yeah.
This is an example. So this is an actual good one to talk about, because as you can see, price didn't come back up to, like, let's say the middle, right, which would have been like up here. You know what I mean? So think about it like this. If this 50 wasn't here, okay, this would have came up higher. Does that make sense?
Yes.
This would have came up higher to more the middle of the range, where you're about, 25 pips away from the low and even higher up here. So then that would make it a more easily identifiable continuation trade.
Mark, I have a question. So this is basically when I'm doing like backtesting, I see after the peak formation high, let's say, and you go down to the level one, and let's say this move down here, and then it goes up to the 50, and they continue all the time, most of the time. It
Okay.
pins to the 50 here, and then continue down. So
You're talking about like right here.
yes,
So this right here.
I'm gonna show you. Yes, yes, correct here.
Okay. Yeah.
I see it. You know, when backtesting, I'm seeing this happening all the time.
Good. Make a note of it.
Yeah, I think it's.
If you see this happening all the time,
Yeah.
I mean, you're going to see it again, right?
Mm-hmm.
So this is just noticing the behaviors that they're doing on that specific pair.
Yeah.
So if you see this, if you're seeing it in backtesting over and over and over again, well, when you see it in the live market, what are you going to do?
I'm gonna take it.
You're going to take it.
Yeah.
You know, you're not going to question it or second guess it. Your brain's not going to go against you because you've seen it over and over and over again.
Exactly.
And that's the whole point of backtesting. So you can literally train your brain to be like, okay, take the trade and not talk me out of it 20 minutes later.
Right. Exactly.
You know? All right. So this one here, same thing. Pins to the 50.
Mm-hmm.
All right. Like what you just said, literally the same thing.
Same. Yeah.
Same thing. Pins to the 50 all the time. This one here, pins to the 50 again. I mean, I don't know about you, but you see this one up here?
Yeah.
That he circled that one, this one again. This is like almost like every day almost. This is a pin to the 200, right at the end of the Asian box here. Pin to the 200 again. Actually, that last one had a pin to the 50 as well.
Yes. Yeah, I saw it.
This is a pins to the 200. You can actually use this as two different ones because you basically have a W here going up as a take profit, and then you got the New York reversal going right back down. See that?
Yeah.
So you got two trades.
Beautiful, awesome trades here.
You got one coming here. You're basically pinning to previous week's low, right? You got a W pinning to the previous week's low, going all the way back up to the 200. And then during the New York session, you're basically pinning an M straight back down. Where do you go? Previous week's low. All right, so this one here, I believe it's pinning. He's saying pinning to the 200 is what I'm going to get out of this because this is the 200 here. So type 2 pattern here, straight down, comes back, and just continues on. Let's see. What can anybody guess what this is? Because I don't know what this is since they didn't title anything.
Mm-hmm.
Can you see anything here on this chart?
This is
retrace and pull back to the 50 in the London session there.
Okay. Retracement of pullback bounces off the 50. Okay. I can see that.
As well as the US session.
Yeah. So two pullbacks here. There you go. Yep. How about this one here? By the way, if you're seeing this on replay and this is your example, make sure that you're labeling this stuff so we know what it is that you're thinking. So what are we looking at here? Anything?
maybe he's looking at this one here and take profit one here, take profit one here, maybe.
Yeah. So that could be a possibility there. Yeah. I mean, that would be a W here.
W. Yeah.
All right. Going back up. All right. So here we got pins to the 50 here, they're saying. So here we got pins to the 50. Asian range is here. So move down. Basically like a type 3 setup essentially. Going back. And then you can actually use this as take profits as well. So is everybody like, you get this stuff, right?
Yeah.
Pretty simple to understand the concept, yeah?
Yeah.
Yeah.
All right. So you understand pins to the 50, pins to 200, using the EMAs as take profits. As far as going and getting, let's say the whatchamacallit, the using the EMAs when you use them to take profits, when you get to the 800, you pretty much have to be at peak formation high or peak formation low off of the first level. You get a very good trade essentially to the 800, right? Is where you want to get those. Most of the time, you're basically looking at trades to the 50 or to the 200. The 800 will come into play when you have that transition that's happening from going up to basically going down again. And the EMAs have to cross over. That's where you get those, those trades from here all the way down to the 800. Makes sense to everybody? The 5 EMA, what do we use the 5 EMA for?
To close below or above if you want to stay in a long trade.
Right. The longest, to try to stay in the trade as long as possible, you can use the 5 EMA. So if the 5 EMA is essentially doing this and price, let's say, is below it and just keeps moving down, as long as the 5 EMA is below it, you're good. No need to panic. It's not until we get something like this and it closes above, you should probably get out of the trade because that momentum is just gone, right? Also, things to consider as well alongside of this is, when this comes back up, what time is it? Is it 2 p.m.? Is it 2 p.m. in the afternoon Eastern time? If it is, your day should be over trading. You know what I mean? If it's between, let's say, 7 a.m. and 8 a.m., which is that window, right? That gap window here between these two, okay? And you see the behavior of basically the 5 EMA doing this and comes back and closes. Let's say you're in a long. So let's say you're in a long trade going up, and here's the gap. If this is the New York session, this is the London session, and you have the 5 EMA inside of that gap, very likely that you'll have this happen, a continuation trade at least to tag the high here. Okay, so if anything, you can move up your take profits or stop losses up here to protect any profits. But if it's in this gap here, very likely that it's going to do another swing back up like this. So if you want to get out of the trade, get out of it, but just know the behavior that's coming back around again.
Mark, I have a question regarding this candle here that you drew. This is a down candle or going up candle?
This would be like a down candle, right?
Okay.
So,
okay, and it's closing below the 5, right?
Yeah, so think of it like this. Let's do, so this is the 5 EMA here. Just say the 5 EMA is like this, right? Like that. You basically have your candles, you're going up, 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 right?
Yeah.
And then you have the EMA coming back and closing below.
Yeah.
If you're in that gap, a very high likelihood that essentially this is just going to come and continue back up again. Okay. So if you want, you can just basically move your stop loss up. You can take if you're in profit, let's say 30 pips, and you're outside of the box, like take your profit, right? Call it a day, go back to sleep or something. Mm-hmm. If you're 10 pips up, 15 pips up, you can move your stop loss up protect, let's say, 10 pips of it and see how far down this goes and goes back up or not. Each situation is going to be different, but I'm just saying that, you know, there are ways to keep it going, essentially. You know what I mean?
Yeah.
But at any point, if you're up 30 pips, I mean, take your profit and call it a day. There's no need to, you know, to do any of that stuff. Be happy that you got 30 pips and come back tomorrow. Like, no need to be greedy or anything like that. Just take it and run. So we know what the 5 EMA is for. We know we're using the 50, the 200, and the 800. We know what those are used for. Take profits. And then also telling you the trend on the 1 hour time frame and the 4 hour time frame, right? This is the 50 on the 1 hour. This is the 50 on the 4 hour. So if you're just looking at a 15-minute chart, this is basically where the 50 is on the 1 hour. This is where the 50 is on the 4 hour, right?
Mhm.
So you know already by looking at this that on the higher time frames, on the 4 hour time frame, your trend is already down. You get what I'm saying? Because price is still below the 50. That's all you can, that's what you use those for. All right, any questions regarding EMAs? None at all, we're good. So we understand what we're using them for, how we're using them, yes? Take profits, trend direction, and trade setups to push price down. Pins to the 50, to the 200, pins to the 800, right? Now you don't take trades just off of these things alone, right? These are not entry points just because it's pinning to the 50. You still need to have the pattern, you still need to have the timing, you still need to know where you're in the cycle. So PTC always goes above everything. These are just extras to help you get extra confident and extra confirmation. If you go to the chart, look at EJ on Friday. Look at EJ on Friday, and you'll see what I'm talking about when it comes to pinning to the 200. Let me see if I can pull it up real quick because it's a really good example.
What time frame is that?
15-minute chart. It was here. Asian range here, straight move down, pin to the 200, pinned to the previous week's high. So what does this tell you if it's pinning to the previous week's high? If the previous week's high is all the way up here and we're already above it and we're coming back down to pin it, what does that tell you?
Are we gonna go up?
That we're going to go up, right?
Gonna go up, right?
We're pinning to the previous week's high. We're pinning to the 200. We have a railroad track here. So all these things come together. You have this action down here on the TDI where it comes straight down into the zone here where you can trade it back up. So all these things that you have all work together. The more of this stuff that you have coinciding together, this is the trade. These are the trade setups that you should be looking for. So if you got 5 pairs that you're looking for and you got 2, let's say 2 of the pairs are actually giving you something, which of those 2 pairs have the better setup? Which has all of the different evidence that you can use in your favor? Whichever one has the most, that's the one that you're taking the trade on. Does that make sense to everybody?
Yes, it does.
Yeah.
Okay. Don't take 10 trades on 5 pairs. That don't make no sense. You got 5 pairs, and some of you are even focusing on 2 or 1 pair, which is fine. But if you got 5 pairs, and out of those 5 pairs, you got 2 or 3, let's say, potential setups, Which of those 3 or 2 potential setups are giving you the most evidence? Whichever one's working in your favor the most is the ones that you take. You don't worry about taking 3 trades just because there's 3 available. Which out of those 3 trades is the best? If all 3 of them are telling you the same thing or giving you, 3 or 4 confirmations at once from all the different tools that you're using, then by all means you can take all 3. But you're not taking all 3 at your regular lot size. If you're taking, if you're using a standard lot size for your trade, that doesn't mean that you're taking a standard on all 3 of them. You're just going to divide your standard by 3 and then use, divide it by 3 so it's equally on all 3 of them. But the main thing is that you guys want to take the best ones. Take the best pairs. Take the most be the most pickiest person. You don't want them all. You just want the right ones. That's why I say on a weekly basis, your average trades should literally be 4 to 5. That's literally like one trade per day if you're trading 5 days a week. And if you're taking the right trades with all the stuff that's together, you're going to have a very high percentage of wins. But if you start taking stuff too early, stuff that don't have all the confirmations, you're just taking it because you're tired of waiting and you just want to get in a trade because you feel like you want to do something, then you're going to have a high rate of failure in your trades. All right?
Yeah.
All right. What questions do you guys have?
I just was noticing, I came in a bit late, sorry, but I was just noticing in my own back testing that the EMAs, I think you alluded to it just a while ago, like when the 13 and the 5 is under the 50, and it kind of goes in sequence. So you have the 13 and 5 to the bottom, then the 50, then the 200, then the 800. Price tends to go up, right? I've noticed.
Right. So, I mean, if these EMAs are under you like this, right, then price is basically going up because it's in an uptrend on the higher time frames, right? But at some point, it's got to reverse.
Yeah.
Right. And so that's when you get essentially your trades like this. Peak formation low, you get one level, you go straight up.
Yes, and that's when I find sometimes there isn't much of a level, but yet it goes all the way up.
Yes.
And you don't get any levels other than 1, maybe
1,
2.
depending on the pair that you trade. This is, literally behavior that you're going to notice. The ones that are going to come real easy to you is when you get to know them, like this right here that happened on Friday. So this trade right here was on Friday that I took, right? This setup right here. So what do you have? I literally came on Friday and it was like 2:30 in the morning. I just looked at one pair, this pair. I'm like, oh crap, look, peak formation low. It was riding down the whole week. The low of the week, it came up sideways and it was right here. And I'm like, oh shit, that's just going to go up. I didn't even need to wait, think, nothing. I just took a trade. I took a trade, put the stop loss down here and went to bed. Put my take profit up here. So when you get to be comfortable, when you see this stuff, like you already know what's going to happen.
Yeah.
Because you've seen it over and over and over again. You see the same stuff over and over and over again. So, I mean, it's like there's no thinking about it. You already know.
Is that the straightaway trade right there?
This is a straightaway trade, yeah. So when you see stuff like this, I mean, you just do it because you've seen it over and over again.
Yeah.
There's no thinking about it. You just know. Like literally, you just know. You're like, crap, there it is.